Bottom Line.
Welcome to the Payments Podcast. I'm your host, Bottom Line Managing Editor, Owen McDonald. Digital banking, financial messaging, and B2B payments overall are awash in complexity. But a new year brings renewed optimism about a more streamlined future. Delving into the trends of 2026 and perhaps a bit beyond, I'm delighted to have Bottom Line's Jessica Cheney in North America and Vitus Rotzer in Europe joining us today. Jessica Cheney, Vitus Rotzer, a warm welcome back to the Payments Podcast.
Thanks, Owen.
Thank you.
Okay, let's dive straight in. Many banks are lagging in real-time payments despite having complied with the ISO 20022 November deadline. Industry voices are saying we need to quickly move past that milestone and start selling the added value of ISO 20022. What are some of the value-added services banks should prioritize in 2026 using new ISO messaging capabilities? Jessica, let's hear from you first.
Yeah. Oh, and I think the truth is ISO 20022 compliance didn't make anyone more competitive. It just kept them from being left behind. In reality, ISO compliance was the easy part. The real challenge is monetizing it. The opportunity isn't in the format. It's in the data and the intelligence around that data that it unlocks. Banks should be looking to automate reconciliation, predict liquidity, and deliver smarter, faster, cheaper payments now that we're all on the same ISO playing field. The next phase about ISO isn't about the messaging. It's about monetizing those insights. If banks don't build that layer, fintechs will. So if you're not selling insights going forward, you're just selling the plumbing.
Right. Vitus, your thoughts?
I can add to that effectively ISO 20022 has evolved from a regulatory milestone to a strategic lever for growth. Its rich structured data enables now banks to deliver faster payment, automate compliance, and unlock new revenue stream, but they have to do it. And it's true that the former will not do it by himself. So we have a few examples, but you just mentioned a few, Jessica, but the reconciliation, the embedded API or B2B payment and API monetization, banks should be accessible via API for their partners. Otherwise, fintech will take the place, and that's true. And the fraud detection is certainly also something where they can invest. This will not monetize, but it will avoid losing a lot of money because this is another critical area where ISO can help basically the banks to enhance their fraud detection.
Yeah, and I think I'd add one more example, and it's on real time. Oh, and that won't surprise you at all that I'm going to talk about real-time payments a second. The ISO format is the plumbing for real-time payments in the US. The monetization and the icing on the cake is the fact that the format allows for conversational payments. That's the transition we need to make in 26.
Conversational payments. I have a feeling we're going to be talking more about that as the months roll by. Moving on, a lot is riding on making cross-border payments faster and safer in 2026. I'm going to stick with you for a minute, Vitus. What are expectations around CBPR Plus now that ISO 20022 has moved off of legacy messaging? What improvements will users notice early on?
The global payment is clearly entering in a new era of speed and transparency. And with CBPR Plus completing the ISO 2022 migration, banks can achieve near instant settlement, automate compliance, and getting full visibility across border. In terms of speed, you have the last mile that can be now covered with instant payment depending on the region. You don't have this transformation to be done because everyone is on CBPR Plus. So we are at the end of this transition period that will also speed up the process. You have structure like GPI to help you tracking where the payment is. That will also remove some friction and increase speed. I also mentioned the safety, which has nothing to do with speed, but the fact that you can check payment avoids errors and avoids to resend and to check and control. So all this will enable banks to reach the G20 goals and objectives for faster, more secure, and more inclusive payment towards 2028.
I have just a little bit of a thought on this that I wanted to share. I think the real disruption in cross-border payments is when they stop feeling like they're cross-border. When banks and other parties treat international payments like they treat domestic ones, consumers have that expectation. So I think that's really where, when we stop talking about cross-border payments and we just talk about global payments, is where the industry should go.
That's an excellent point. Embedded payments are expected to make big gains in 2026. Jessica, this is for you. How can banks and FIs partner more effectively to scale embedded business payments next year?
I'll start with a few comments about embedded payments in general. Embedded payments are not a feature. They're a bank survival strategy. Banks that cling to legacy solutions being provided on their bank branded websites are going to be outpaced by fintechs. Embedded payments are forcing banks to decide who they want to be: a platform, a product, or just plumbing. The payments infrastructure is an enabler, but the mindset is the real barrier. Banks have to start treating APIs and ERP partners like distribution channels, and they need to focus on compliance as a competitive advantage. Really, they need to answer the question, do you want to be the ecosystem or do you want to sit invisible inside it? Both of them are viable strategies, but pretending that they can't make a decision about or don't have to make a decision about this at this point in time is really not a situation they can continue. They have to make a choice and decide which path to go down.
Can we say, Jessica, that they need to put basically payment at the front door of everything they do, up towards the top of the chain somehow?
Yeah, I think that's absolutely. What they need to decide, Vitus, is where they want their brand. Is their brand going to be associated with being a payments powerhouse, or are they just want their brand to be associated with being the plumbing that supports payments?
There's a lot to think about there. Bank consortia sharing data isn't necessarily a new idea, but there are new areas where banks need to start sharing data to assist the wider payments ecosystem in preventing fraud. Will this become a bigger priority in 2026? Vitus, please take it first, and then I'd like to hear Jessica's point of view.
I think it has to be, because if Rotzer are leveraging more and more AI, they are leveraging multi-bank approach. So they are checking on multiple banks. And if you remain in a silo approach, protecting yourself within the bank only, without taking into consideration the whole ecosystem, you're going to fail. So first, you need to also use AI to protect yourself, to improve your system. And secondly, I think the ecosystem needs to combine knowledge, share data, and protect themselves as a whole. It's like animals. They put themselves in groups basically to protect themselves. You will see the same effect here.
I could be a little bit more blunt about this, right? Fraudsters already share data better than our banks do, right? We need to change that. If we can't create or be part of a consortium exchanging real-time fraud, then we've got a real problem. Privacy concerns cannot be an excuse, right? We need to take advantage of federated learning and tokenization to support the privacy concerns that we have, yet being able to share data in a very, very needed consortium. If we don't, the fraudsters are just going to continue to own the space, right? And it's a little sad that we know the solution to this is to continue to share data across institutions, but that we need to break down those silos, and we need to do it without having a regulatory push to do it.
It's true that banks have a long history of trying to protect their data and the privacy of data. So it's a long way to go for them, but it's a necessary journey that they have to do, definitely.
That's right. We all have to change in this environment. Jessica, from greatly enhanced chatbots to automated loan approvals and fraud detection, AI and automation are creating new opportunities for banks. Where should banks focus AI and automation efforts for B2B payments next year, and why? Jessica?
Yeah, I think that now's the time for us to really think about this, but think about it in under the context of AI isn't about replacing people, it's about replacing inefficiency. And it's also an area where we need to not get crippled by the art of the possible and ignore the table stakes and the easy things that we should focus on, like using AI to eliminate manual reconciliation, deal with automated onboarding. Ideally, we get very comfortable with allowing AI to do predictions around cash positioning. You know, providing answers to the questions that treasurers have every day. And we know what those questions are. So it's not something that really needs to be uh, from the future. These are things that we know today and have the technologies to be able to incorporate into solutions. That's I really think we need to start with AI.
Vitus, a few words on AI?
Is it still a question? Do we can we avoid AI now? I think it's becoming very complicated, and there are many opportunities that we can leverage AI for, and we really need to go into it. It's a productivity improvement across all companies, including for banks. It can bring added value, and I agree with Jessica. It's not about replacing people; it's really about enhancing and faster and being more productive. And having time to do something else where we can automate with AIs, get more creativity. I will encourage any and all the banks and providers to really jump into it and positively jump into it. And this is maybe the most important aspect. It's not a threat, it's an opportunity, and we need to see it like that.
Okay. Last question. It's about AI again, but hard to avoid. AI is a game changer for the fraud underworld. Deepfakes and account takeovers are already stealing billions. Commercial quantum computing is only 4 years away. These technologies in the hands of criminals is a very serious situation. How can banks and FIs combat this new breed of fraudster while balancing data privacy regs? Vitus, please take this first, and then let's hear from Jessica.
It relates a little bit to the previous question. So first, you have to jump in AI. You have to understand it and you have to leverage it. So I will also adopt for a bank a multi-layer approach to fraud first and immediately, making sure that all the different layers are covered with multiple solutions, including AI into the scheme. Then we spoke about the consortium. So a collaborative approach to protect themselves is key and is very important, and it will not work without that. And finally, quantum safe encryption is coming, as you mentioned, but we still have 4 years. So we also have 4 years for banks, so they need also to anticipate this, having cryptography and going much further in encryption than what we have today, because the one that will be first will unlock the key, definitely.
Absolutely. You cannot fight fraud oriented situations today without AI. The fraudsters are using AI, so you need to use AI to protect yourself against them. If not, what's that proverbial saying? You're taking a knife to a gunfight. So it's really something that people need to take a step back and think about. The fraudsters are certainly collaborating. The banks need to collaborate. And we need to collaborate in terms of the technologies that we're going to use in our defenses as much as they are collaborating in the technologies that they're using in their offensive. So I really think that that's when we'll actually turn the tide on preventing some fraud. Right now we're in a back foot position in dealing with fraud. We're not truly preventing it on a large scale.
Yeah, and maybe a last comment on that is to collaborate with regulators. This has to be combined. In the ecosystem, we need to include the regulators that should facilitate all this. Otherwise, if they are blocking data privacy and exchange of data, it will be much more complex. So we need to include them into this reflection.
There we have it. There are pivotal years in business payments. We think 2026 will be one of those years. We urge you to listen again to this 2026 Outlook chat and adjust plans accordingly. A huge thanks to our guests, Jessica Cheney and Vitus Rotzer. To our audience, the smartest people in B2B payments, thanks for listening. Hit subscribe. Catch us again on your favorite podcast platforms, including Apple, Spotify, Blueberry, iHeartRadio, and YouTube. Bye for now.
The Payments Podcast from Bottom Line.